Congratulations, you just bought your first investment property. Now what? This is only the first step in the road to successful investing, and today we're talking about what to do right after closing. I'm Chris Clothier from REI Nation, and today I'm going to walk you through the key actions you should take to put your first investment property into the best position for stable, profitable investing, especially over the long run. What we do immediately after we buy is vitally important to the success we're going to have on our investments. So let's get right into it. Right off the bat, before you close on a property, there's a lot of things that you need to be looking at. You hear all the time about exit strategies. Having a really clear idea of why did I buy this property in the first place? That's important. Are you looking for a short exit, like a fix and flip type strategy, or are you looking for a long strategy where you're going to be owning the property, doing short-term rentals or long-term rentals? It's key that you know going in exactly how this property is going to fit, what you're going to do with it, and how it's going to work. When you have that, a lot of other things come into focus, such as property management. Is it something you're going to manage? Do you need to hire a management company? Renovations. There's a lot of little check boxes you got to make sure before you close that I know what I'm doing going into this deal and when I'm going to do it. Insurance is another big item because a lot of times, and I'm telling you on the front end, depending on what your plan is with the property, if it's going to be vacant for any period of time, you might want to make sure you have vacancy insurance, not just regular property insurance. So there's some key things that you need to make sure you're aware of before we buy. As soon as you have bought the property, now we own it. What am I doing next? If the property is one of those that needs renovations, right off the bat, what you're looking to do is find the right contractor, make sure you get the right contractor hired. But even more than just hiring the contractor, it's understanding your full scope of work. Many times, if you're going to be a passive investor, knowing the verbiage, understanding what they're talking about is key and critical. I tell investors all the time, and that plug here again for the BiggerPockets forums, get in there and read and talk about the verbiage that happens in the renovations world. So you want to get yourself up to speed on what's everybody talking about? What's a soffit and what's fascia and what type of equipment is going to be needed in the house? Is it electric or is it gas? Am I putting appliances in? Am I not putting appliances in? There's so many things that you need to be understanding. Obviously, I'm thinking about the subfloor and the foundation of your property. So make sure that you understand the verbiage going into this. There's so much more than just I bought a piece of real estate and I own it. You need to know a little bit about what goes into a house to begin with. So you've got renovations you need to be prepared for. If it's vacant, I go back to what I said a few minutes ago. Do you need vacancy insurance? Does it need that renovation before you can rent the property out? Is it going to be short-term or long-term? Because the difference between those isn't just income and length of stay, but how much money you have to spend on the front end. Short-term rentals require an enormous amount of capital on the front end. Furniture, the decorations, every utensil and little piece of home that a short-term renter is going to want to see in a property, especially if it's a vacation rental. So as you go into a property, you need to make sure that on the front end, I know what I'm talking about. I'm familiar with all my verbiage. And on the back end, I need to get things moving relatively quickly. So I need to have my contractors lined up. I need to have my work lined up. I need to be furnishing the property if that's what it's going to take. I need to be buying all the goods to go into the property as soon as possible. If I'm going to do long-term rentals, do I need to hire a management company? Am I going to manage on my own? When am I going to place it on the market to be rented? And I'm going so quickly through this, I understand, but these are all these different little things that we have to keep in mind. It's amazing that we got started. Believe me, it's amazing that we bought the first property. Today, we're officially a real estate investor, but it doesn't stop there. There's so much more to real estate than just buying that first property. Once you have all of these, whatever pertinent questions are answered for you, the next big thing comes in, for me, I'm constantly looking at what become yearly checkpoints. So things that I need to put on my list and create a little tickler reminder inside of my calendar that says, hey, 1 year from now, I need to be checking my insurance rates. Insurance is one of those items that I should be repricing annually, automatic, like always looking for the best rate I can get for the amount of service I want. Make sure it's apples to apples, but I should never take a year where I don't try and get better, lower insurance costs, because insurance is one of those items that jumps quite often. I should be putting in my calendar file that I need to challenge my taxes on an annual basis, especially if I'm in an area where the taxes are going up, especially if they go up because I purchased it. And so now they're showing a higher value for the property. I should always be making sure I'm treated fairly, especially if I am far from home. I should should always be looking to make sure that my taxes are something that I challenge. But oftentimes investors, they don't think of these things because it's just my investment. I need to take care of the rent to make sure I'm getting it collected and cover the expenses. But we don't think about these other things. I should always be looking at my management. Am I getting what I expected to get? So these become yearly checks. But the day I buy it, that very next day, I'm setting up my reminders of these are the things I do. So I monthly check my management company if I have one. I yearly check my insurance and my taxes and my property management if I have all of those. There are some other minor things along the way, but you'll catch them as you go, such as an HOA. Not everybody buys properties that have HOAs, but if yours does, you need to be up on the HOA and make sure you're following all the rules in the HOA and staying up to date on any rules that may be changing. It's nothing to be scared of. It's just something to be aware of. And finally, the last thing, as soon as you buy that property, and I'm not trying to be hyperbolic here, but you need to start looking. None of us as investors are going to change our current situation with one property unless we're buying, massive multifamilies or big commercial properties, which, let's be clear, that's not what most of us, including myself, after 20 years, that's not what I'm buying. I'm buying single families still, just as many of you watching this video are. So if you're buying a single family home, the next thing that you're looking at as soon as you've closed is, where is my capital? And what am I looking to do next? I need to build scale. Scale may only be 4, 8, 10 properties. It doesn't have to be massive, but it needs to be big enough where I can have life adjusting income later. I always tell investors that one property paid off free and clear, absolutely wonderful. I mean, that can absolutely help. But later in life, when we're looking at retirement years or other opportunities for us down the line, it only takes a small handful of properties to really have big adjustments and big improvements in our standard of living later on, in the way that we're able to retire, in the way we're able to take advantage of whatever comes next. So as soon as you buy that first one, make sure that you've got, everything lined up. You're taking the next steps. You're not waiting. You're moving quickly. You are setting yourself reminders on when I need to take my next steps, and you immediately start looking at that next property. Even if it's not for another half year to a year down the road, it's always best to start getting everything lined up and just have yourself mentally ready that when it's time, I'm ready to go. Everybody, thank you for watching. I hope you found this video helpful. I'm Chris Clothier from REI Nation. If you have any questions, you can let me know in the comments, or you can always connect with me at BiggerPockets. We'll see you soon. Thanks.